Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Juice. Despite some positive signs of inflation easing, Thursday's Consumer Price Index data, which measures the prices of a basket of consumer goods, came in hot. Let's get the bad news out of the way. First off, transportation continues to hammer consumers, as used vehicles contributed 1.68% to overall inflation. Without this piece, we'd be at 5.82%. And housing also saw steep increases, with shelter adding 1.45% to overall inflation. Only one subcategory saw price decreases year over year: wireless telephone services. Steep increases in used vehicle prices started around April or June of last year. And as we lap those months this summer, the percentage increase in prices year over year will ease. However, you can see in the chart above that even though the rate of inflation is slowing, it's still moving higher. Essentially, the car has stopped accelerating, but it's driving 100 miles per hour. The higher than expected reading adds to the case for the Fed to hike rates in March by 0.5%, as opposed to a typical rate hike of 0.25%. So why is this happening? Well, supply and demand are grossly mismatched. Ironically, the government stimulus, which kept people off the streets, also padded their pockets, leading to a surge in post-pandemic demand that supply simply couldn't fulfill. On top of that, labor remains extraordinarily tight, with unemployment at 4%, a relatively low level historically. To attract and retain employees, companies are forking over huge sums of money. In the US, the focus has now shifted on reducing imports and creating more domestic production, ironically leading to an increase in imports needed for construction. The bottom line is this: interest rates are going up this year. That means you'll pay higher rates on everything you borrow, from mortgages to credit cards. The good news is you also make more from savings accounts. Ideally. Heavy demand, coupled with higher rates, favors banks with high amounts of lending, especially on the corporate side. Take a look at regional banks like Heartland Financial, as well as U.S. Bancorp. That's all we have time for today on The Juice. Click follow and subscribe to The Juice email for your daily dose of market minerals.